What's up everyone, it's Kadi with MoneyVest. So Nvidia here continues to be the star of the show, pushing closer and closer to $3 trillion market cap and now getting closest to Apple in over 15 years. So since 2009, Nvidia has never been as close to Apple's market share as it is now. So we got lots to unpack, got inflation data coming out later this week. So we're going to be covering that as well because we do have the PCE numbers scheduled for later this week, which the markets obviously are going to be reacting on. But the markets here continue to do what they do best, and that is push higher on the back of semiconductors. I did trim and exit a few of my positions considering how stretched the markets are right now, especially when you consider semiconductors. And the market breadth, of course, getting more and more concentrated into a few stocks, which I know for a fact is not going to end well. Eventually, we know that what goes up must come down. Markets don't go up in a straight line higher, let alone straight up in a parabolic fashion. So hope you all enjoyed this video and find it helpful. If you do, make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you're just joining us for the first time. And again, I've got a big announcement to make. We do have our MoneyVest platform launch happening on first week of July. And all the members, all the existing members will have access to the beta launch. So you'll have early access as part of the internal beta launch that you can, kind of access the platform, check out individual stocks, do your fundamental analysis, look at their financial statements, the company overview, the key stats table, the financial calculators for modeling and figuring out what the intrinsic value is, as well as our very own crafted, the MoneyVest index, MoneyVest metrics, as well as the index, which is going to be added in the future. So there's a lot of really, really cool features that we're going to be adding here for our platform. So again, you can access all of that. And we do have one single tier available with a 16% annual discount that's available. So this right here is going to be 51% off pricing wise, because once it's locked for you for the beta, it's going to be locked forever, and the pricing will not change for you as we continue to add more features, more functionality, and the price of course is going to increase to a much higher level in the future once it's fully developed. But for the beta, there's going to be a 51% discount, as well as the 16% on top of that if you do pay annually. So you're getting closer to 67% off for the beta. Limited spots left if you want to take advantage of that as well. And also want to mention that May 50 is the coupon code. All courses 50% off expire at the end of this month. So there's a few more days left if you want to take advantage of that as well. So coming over to the calendar first, we do have the PCE numbers scheduled for, I believe, tomorrow. So tomorrow we've got, so we got on Friday. So Friday, May 31st, we got personal income and outlays. And this right here is going to be those expectations for PCE index. Month over month, the expectations are 0.3%. Year over year at 2.7%. And then for core PCE, which is, again, a more preferred measure of inflation for the Federal Reserve, at 2.8%. That's the consensus and what the Federal Reserve is expecting and the markets are expecting from the inflation standpoint. Now, coming over to the big headlines, I'm actually going to come back to this because we are on the topic of interest rates and inflation. So let me just come back to this conversation. So this right here is going to be all the big banks and when they are expecting rate cuts to take place in 2024 or 2025. So the earliest we've got is Citigroup. Citigroup is expecting a rate cut in July, first cut in July, and total cuts in 2024 of 100 basis points. This is as of May 24, so just a few days ago. This was updated, and again, Citigroup is probably one of the most optimistic when it comes to rate cuts because they're expecting 4 rate cuts of course, total 100 basis points starting in July, so pretty much in a couple months, and total cuts of 100 basis points, and nobody else. I feel like MUFG, so MUFG is probably also one of the most optimistic here with July rate cuts and 125, so 5 rate cuts is what they are expecting from the Federal Reserve, and JP Morgan July, and then of course we got 75 basis points as well. So those right there are the 3 most optimistic investment banks, financial institutions expecting for the Federal Reserve to cut interest rates anywhere between 3 to 5 times this year starting in July. And then we've got, of course, September. And then we got lots of people, lots of investors, lots of analysts expecting September. So Morgan Stanley, we got Nomura, we got Oxford Economics, we got TD Securities, UBS, Wells Fargo. And then we've got HSBC, Goldman Sachs, Evercore ISI, and then Barclays, and all of them expecting anywhere between 25 and 50 basis points. And probably the most pessimistic of all is going to be Jefferies. They're expecting 2025 with 0 rate cuts in 2024. We've also got Mizuho, also 2025, and they're expecting 0 rate cuts in 2024. And then finally, we got Societe Generale, also 2025, and expecting 0 cuts in 2024 as well. So we got 3 very optimistic banks, Citigroup, then also we've got MUFG, and then of course we've got JP Morgan, and then some very pessimistic on the street, Jefferies, Mizuho, and Societe Generale, expecting 2025 with 0 rate cuts in 2024. And of course, every other bank kind of like in the middle, expecting 25 to as many as 50 rate cuts, 50 basis worth of rate cuts, starting in somewhere between September and December. So let me know your thoughts down in the comment section below. I strongly believe that, of course, a lot of the rate cut discussion has to revolve around inflation. If inflation doesn't come down fast enough, I think the Federal Reserve is going to feel very comfortable keeping where interest rates are. I think they've mentioned this time and time again. They've mentioned this in their minutes. They've mentioned this in their speeches. They've mentioned this in their testimonies. Jerome Powell's been very adamant with this idea that they're not getting that greater confidence in 2024. And if need be, they can keep rates where they are without a problem as long as unemployment doesn't fall apart. And speaking of unemployment, we continue to see really attractive numbers coming out of jobless claims. Tomorrow we're going to get those initial claims here. But overall, we've seen some very, very good numbers come out of the unemployment report here. So coming over to the markets now. So Nvidia, first of all, market cap hasn't been this close to Apple since 2009. So the road to $3 trillion market cap for Nvidia might very well run through Apple. And Nvidia shares are on a major hot streak, as you can already imagine, while Apple stock has been in a rut this year. It's been selling off. It's down year to date. I think it might be flat year to date, with Nvidia up double digits on a year to date basis already. And now the market cap gap between the two companies is the tightest it's been since 2009. And of course, Nvidia at 2.848 trillion, Apple at 2.913 trillion. The margin between these two companies is $65 billion, which is really only 5 minutes worth of work for Nvidia if it were to overtake Apple as the second largest publicly traded stock in the US. Of course, the first one, Microsoft. This right here is how quickly Nvidia has ramped up its market cap here. So you can see how long it took for Apple to get to where it is, and how quickly Nvidia has gotten to where Apple is. So it's more like, a little bit of a linear growth versus more like, parabolic growth. And that's really what we are kind of witnessing between these two companies. And you can kind of see that how massive the margin was. I mean, if you come down to here, right, around this time when Apple was at an all-time high around this level, and Nvidia pretty much was on its way lower. So you can see there was a massive, massive gap between these two market caps, and the margin was so wide, and how quickly Nvidia has just covered up all of this margin and getting up to Apple's market cap. It's just astonishing how quickly Nvidia has gone up. And to put things in perspective here, at this point last year, so same time last year in 2023, Nvidia wasn't even worth $1 trillion. So much so that as far as 3 months ago, it wasn't even worth $2 trillion. And now it's almost going to be worth $3 trillion. Just goes to show how quickly things happen. It takes you forever to get to $1 trillion, and it takes half the time to get to $2 trillion, and even shorter amount of time to get to $3 trillion. Things, of course, compound in that fashion as when they are moving more parabolically. So moving over, Wall Street is getting more and more bullish. So again, congratulations to anybody who's been trading, investing in Nvidia. Fantastic moves to the upside. Of course, I've been buying SMH, got a decent sized position in SMH. Feel a lot more comfortable. I did kind of get rid of AMD and ASML, locked in profits well over 45 to 57%. Happy with those profits, and we'll be kind of reallocating some capital on better opportunities, keeping a close eye on the MoneyVest index, and of course better and better individual stocks and the broader markets as well. So I think that's really the idea here, and the current environment is basically what the bulls were hoping for. and they are getting it. And it's basically a soft landing. BMO Capital Markets Chief Investment Strategist Brian Belsky noted that markets have made an important shift as this data has come in. Markets are now pricing in about 2 rate cuts this year, down from a peak of nearly 7 to start the year. And this aligns with the Fed's most recent projections, in which officials favored 2 or 3 rate cuts this year. And it has become clear to us that we underestimated the strength of the market momentum, particularly considering that investor expectations and Fed policy guidance have become essentially aligned versus a significant disconnect that existed at the beginning of the year. So we talked about how the markets are, of course, expecting the moon, and the Federal Reserve is not giving them the moon. So we need to reprice and expect less so that we don't get disappointed, right? Because if you expect a lot and you get under-delivered, there's room for disappointment. But if you expect less and you get something that's over-delivered, then you're going to get that pleasure, you're going to get that upside surprise. And I think that's much better for the markets, for in general Fed life, than anything else, right? So I think it's fair to say that the markets, of course, now being more aligned with the Federal Reserve, there's lack of potential disappointment in the market if the Federal Reserve does not deliver. If they go from 2 rate cuts to 1 rate cut, sure, we get 1 rate cut, but it's still not going to be super crazy than as opposed to as the beginning of the year when the markets were expecting 7 and the Federal Reserve, let's say, only delivered 1. That right there was going to be a big gap and big disappointment, which no longer exists, which is exactly why, of course, the markets are feeling more optimistic. Regardless of what really ends up happening here, the markets continue to see that momentum strong, and people are deploying money into the markets again. Fed rate cuts face a big reset on renewed inflation risks. So on one hand, of course, we do read the markets becoming more optimistic on this idea. The Federal Reserve and the markets are aligned now, and we could get 1 or 2 rate cuts this year. But inflation, like I said, is going to be the biggest driver for where rates go. If inflation does not come down, I think the Federal Reserve is going to be adamant, very, very stubborn in keeping interest rates where they are. I think higher for longer. And even a lot of FOMC members have continued to talk about this idea that they feel comfortable with where rates are, and including in the minutes they mentioned that they don't feel that interest rates are sufficiently restrictive as of yet, which previously they said it was, but because how strong unemployment is and how strong the economy is, they now are starting to feel interest rates are not sufficiently restrictive as of yet. So that's something to keep in mind. And inside the S&P report, a sub-index of prices companies are paying wholesale rose to the highest level in more than 18 months, suggesting an extension of inflation pressures into the summer. Business confidence has lifted higher to signal brighter prospects for the year, and however, companies remain cautious with respect to the economic outlook amid uncertainty over the future path of inflation and interest rates as well. And this right here, of course, was all the interest rate calls from different financial institutions. Nvidia up almost 7%. Amazon up 78 basis points, Google Meta pushing higher, Apple basically flat, Microsoft basically flat. Semiconductors continue to rally hard. Financials pulled back. We had auto manufacturers, industrials, healthcare, consumer defensives, real estate, basic materials, all of them selling off. Energy was the only sector pushing higher along with technology, and of course Nvidia being a big part of technology that's been pushing higher here. So energy and tech pushing up, everything else was down in the last 1 week. Technology is the only sector that is green out of the 11. And 1 month ago, we've got technology leading the way up over 9%, followed by utilities and comm services as well. Coffee prices, cocoa prices, and volatility pushing higher, with Bitcoin just over 68,000 and Ether just over 3,800 as well. So coming over to the market, first talking about volatility, pushing higher a little bit, so up over 4.3%. So first of all, S&P 500 on the day was higher slightly, 2 basis points, but mostly flat. So it was really just a lot of liquidity pull on Nvidia. Everything else was basically flat or slightly down. And volatility, of course, pushing up over 4%. So this is really just one of those days where we talked about the VIX being low. We talked about market breadth being super tight. We talked about conditions, overall technical positioning being overbought and over, extended to the upside. So that, considering that, we've got volatility going higher, markets flat to slightly down, and a lot of the liquidity just simply went over to Nvidia. That's really what happened. Nvidia is kind of grabbing a lot of liquidity. Everything is just getting concentrated into one stock, which is why I think it's really, really important to be cautious. If you have Nvidia right now from a long time ago, I mentioned this in our Discord as well, you better be looking at selling calls. I think selling calls is going to generate such amazing premiums are so juicy for Nvidia right now. It's at an all-time high, overextended, overbought, valuations to an extreme, premiums are so high. It's such a high priced stock that you can get $3 grand, $4 grand, $5 grand, depending on what strike and how expiration, how far out you're looking at. But you can get some very good premiums, very juicy premiums for Nvidia. I mentioned this in our Discord. The premiums are quite literally insane for Nvidia, so definitely take advantage of that. But volatility is on the move a little bit, so just under 13 right now, up over 4.3%. So keep a close eye on that. Crude oil prices continue to consolidate, but now they're starting to move higher a little bit. So we're starting to see a little bit of that momentum for crude oil, 3 consistent days in a row, pushing higher from 76 back up to $80 a barrel. And this right here is going to be that resistance to keep in mind inside this red rectangle between 81 and $83 a barrel for crude oil. Coming over to Bitcoin. So Bitcoin here also consolidating sideways. So resistance is going to stay put at 72,000. So this right here is the level, with the support level staying put at 67,500 for Bitcoin. So a lot of consolidation here in those levels, and a very strong area of support and demand for Bitcoin in the $59,000 to $60,000 level. And Ether also, of course, rallying hard, pushing higher up over 37%, resistance all the way up to 4,000. Support level down at 3,600, down to as low as 3,300, to as low as 2,900 for Ether as well. So those right there are going to be very strong areas of support. But of course, we are also getting up to a little bit overbought conditions here for Ether. I'm not sure where the RSI is not working here. I may have to reload it. Let me see. Let's just do... Okay, something's wrong with this chart. I'll have to fix it. But the bottom line is it is overbought here at these levels, considering how much it's already moved up. Now coming over to S&P 500, we've already talked about this in our previous videos. I think it's really important to remain careful, remain cautious with the MoneyVest index. Continues to come down 3.63, which is good. We're starting to see some pullbacks in the MoneyVest index here, considering the volatility is pushing higher. We're seeing some stocks rotate back lower below their moving averages. And again, we're going to be watching certain levels. The first one's going to be here at 3, all the way down to 2.4. Then of course down to as low as 2 levels. Far better, more lucrative opportunities for the markets as well. So 3 areas to really pay attention to on the MoneyVest index: 3, 2.5, 2.4, and 1.5 as well. And of course, the moment it comes down to that level, we'll be ready to deploy more cash back into the markets and be a little bit more aggressive. Once again, dollar cost averaging into the markets as well. So S&P 500 near overbought levels here. L3 banker oscillator also suggesting for a lot of involvement, a lot of liquidity flooding into the markets, and we're seeing a lot of consolidation between this 53.30 and 52.65 level for the S&P. And NASDAQ here also pushing higher to new all-time highs on the back of course, Nvidia and technology. And again, overbought here with the RSI just creeping above 70. The MACD and the L3 banker oscillator also pushing higher as well. Support level inside this green rectangle between around 16,000 to as much as 16,500 for the NASDAQ as well, for this index. So got to be careful here. Again, just enjoy the rally while it lasts, pushing up over 17,000 in a very, very long time, perhaps even for the first time, because we got up to as much as 16,996 here on May 23rd. This right here is 16,947. So this is quite literally the first time the NASDAQ just pushed above 17,000 points ever in history of the world. NASDAQ's never gotten up to over 17,000. Coming over to individual stocks now, so starting with Apple, and Apple here starting to roll over a little bit. So intraday there was some selling pressure. I exited Apple today. Resistance is going to stay put inside this red rectangle and this target between 192 and 195, 198 for Apple, with a very strong support here inside this green rectangle at 170. Now coming over to Amazon, starting to roll over a little bit. Resistance is going to stay put roughly at 188, all the way down to the support level sitting roughly at 171 for Amazon as well. So we're seeing a little bit of that pullback and some type of dip for Amazon, still within the context of this uptrend of higher highs and higher lows as well. Talking a little bit about Tesla, and Tesla continues to struggle, down about 1.3%, really consolidating sideways. There's really not a lot of catalysts on Tesla, which is why the volume drop is pretty significant. You can see the volume's been coming down on the day, only 59. 60 million shares traded versus 95 million. That's a 30-day average. It's actually quite crazy how low the volume is right now on a Tesla. Huge resistance and an area of supply here between 190 and 210 for Tesla. So that's going to be a level to keep in mind. And of course, support level sitting roughly at around 153 down to 145 for Tesla as well. Talking a little bit about Nvidia now. So star of the show, pushing hard to new all-time highs. Very, very strong breakout here for Nvidia from its lows at 746. It's now up a little bit over 52% already. Very significant volume, of course. The volume on the day was 65 million. So you can clearly see where the volume is coming out of and where the volume is going to. Our side 79, almost 80. Very, very overbought and overextended here. And of course, we've got a 10-for-1 split coming up as well. I won't be surprised if by the time the split comes, the stock is already at over $2,000 and now they have to do a 20-for-1 split. So they have to change the split to accommodate for the same pricing that they hoped for when they announced it. It's crazy. I wouldn't be surprised if that happens because Nvidia is just on an absolute tear and the momentum's so hot for this company right now that this is the hottest stock in the world. Might not be just in the US, but in the world, hottest stock right now. Talking about advanced micro devices, so I did get rid of AMD today because of course, the valuation. We talked about a lot of things. Resistance is going to stay up at 183. Maybe I could have waited for 183, but that is going to be that next target and that resistance for advanced micro devices. A nice almost 60% profit and support level is going to stay up at 163 for advanced micro devices, all the way down to a support setting roughly in the 140s for this company as well. I picked up AMD in the low 100s. Originally at closer to 105, 106, and it's rallied very nicely at over 60% from those levels as well. So next target and resistance is going to be sitting roughly at 182 for advanced micro devices. Talking about PayPal, and PayPal on the day pushing higher, 86 basis points, but still very much in an area of consolidation, struggling sideways inside this green rectangle. We got the RSI coming down, MACD coming down, L3 banker oscillator has been selling off as well. Resistance at 65 to as much as $68 per share with a huge area of resistance and supply here, sitting roughly at around actually $68, $70 per share for PayPal. Talking about Visa, and Visa here also selling off now, which is good. We want it to come down. We want it to come down to better and better prices where the risk reward is going to get only more favorable. Support level at 266 down to as low as 249 for Visa, and resistance at 282 for this company. Talking about Meta platforms, and Meta here on the day pushing higher 36 basis points, continues to validate this area of support here inside this green rectangle, and resistance and targets back up to as much as 515 to 531 for Meta as well. So this right here is going to be that level to keep in mind as an area of resistance, and of course a very strong support here sitting inside this green area of rectangle between 450s and 475. Talking about Netflix, Netflix was obviously hitting new 52-week highs, trading up again over 649, overbought and overextended. Support level is going to stay put at 636 down to 596, closer to low 600s here for Netflix as well. And coming over to Google, pushing up almost 1%. Support level sitting roughly at 173 down to a much stronger area of demand inside this green rectangle between 150 and 155 for Google. And finally, we come over to Microsoft, and Microsoft here, you'll notice, pushing higher up, basically flat on the day, but been pushing higher, becoming a little bit more overbought and overextended with a very strong resistance sitting roughly at 430 and a support level of 417 for Microsoft, with a very strong area of demand here, roughly in the 395 to 396 level for Microsoft. And finally, we come over to Enphase and Costco. So Enphase here, pushing higher, a little bit over 129, so up over 3.3%. Next resistance and target is going to be 138 for Enphase, and a very strong area of support and demand here inside this green rectangle, sitting roughly in the low 100s, 108, 107. And of course, we're seeing a very nice breakout to the upside for Enphase as well. And finally, we come over to Costco. Costco is going to be reporting earnings later this week. Very overbought. I'd be super careful with this company right now as it's starting to become very expensive at over $800 a share. Extremely overbought at the moment as well. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like, and also do take advantage of the potential for being a part of our beta launch, for internal beta launch. We've got a 51% off pricing right now that's available for a limited time. And of course, eventually, once the entire platform with all the data sets are complete, the pricing is going to increase, so you can lock this in forever. And 51% off plus a 16% annual discount, you're going to get an insanely good price compared to where we would be 3 to 6 months down the road. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Happy investing. I'll see you all in the next video.